This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through the business news stories you need to know about from the continent and beyond. But first, to run through the markets, two updates for you from East Africa. The largest listed firm at the Nairobi Securities Exchange announced its very first interim dividend. 45 Kenyan cents per share here. That essentially saw Safaricom share price rise by over 3% today to about 38 shillings a share, with at least $1.5 million worth of shares traded. The share price, in fact, has gone up by 10% so far in the year. That brings its market cap to somewhere close to $13.7 billion. The power utility, KenGen, also announcing a $6.4 million contract in Djibouti to drill 3 geothermal wells there. It did report some interesting results, $118 million in net earnings for the fiscal year that ended last June. But the market is still relatively lukewarm about it. Its shares are up by only 2% so far in 2021. Here's what's coming out tonight. President Ramaphosa delivers his annual State of the Nation address amid the COVID-19 crisis. Internet services in Uganda are back online after a month-long blackout. And the European Commission has lowered its growth forecast for 2021. So let's start the hour in South Africa, where President Cyril Ramaphosa has delivered his State of the Nation address to Parliament in Cape Town. Now, this year, of course, the pomp and the ceremony that normally accompanies this annual event was mostly absent. Under prevailing lockdown rules, only 50 people were allowed inside the National Assembly. The rest of the lawmakers and guests all took part virtually. Mr. Ramaphosa's address came against a very grim backdrop of an economy in crisis, rising unemployment rates, and a stalled vaccine rollout. South Africa is the worst hit by the COVID-19 pandemic in Africa. The country suspended its vaccine rollout program, which is due to start with the Oxford and AstraZeneca developed vaccine this week. This came after a series of small-scale studies found that the jab failed to prevent mild and moderate illness caused by the new COVID-19 variant that was found in South Africa. So then Angela Kuppler joins us live from Johannesburg with more data on the President's State of the Nation address. Angela, walk us through the highlights of Mr. Ramaphosa's speech tonight.
Well, Raman, he started off in a very somber manner, lighting 3 candles in memory of the 47,175 people who have died from the COVID-related illness. And then he went into his speech and spoke about 4 key focus areas. But he did remind the joint sitting that as of last year, 1.7 million jobs were lost due to the virus. Ramaphosa's focus is on defeating the virus, firstly. Secondly, accelerating economic growth. Third, implementation of economic reforms to create jobs. And fourth, and probably most importantly in my eyes anyway, fighting and defeating corruption. He spoke about infrastructure pipeline, and it's a multi-billion-dollar pipeline that's in the making. There's lots of work that's going to be happening in the next couple of years. He talked about buying local, and it was a solid speech with a fair amount of detail. And obviously he talked about the successes achieved. Probably the biggest one and the most recent one is that $1 billion that Ford Motor Company has invested in their Pretoria plant, and they announced that last week. But now, as all the opposition parties are saying, it's time for action and accountability, Raman.
Indeed. So let's start with a question of action, the vaccine program. That was actually scheduled now, as we understand it, to start in the middle of next week on the 17th of February. How will this be rolled out and how will it be phased? Who's the priority target at the first in the first round of inoculations?
Well, look, initially the health minister in his briefing earlier this week said that, in fact it was on Monday, that Cabinet would make that announcement on the way forward, and they did that yesterday, and they made the announcement that it's going to happen next week. So we'll see that rollout start happening on or about the 17th. They're talking about that date as a flexible one, though, and they're going to be using the Johnson & Johnson vaccine for phase 1 for those healthcare workers. Authorities are using a loophole which allows for a large number of the vaccine to be used without South African regulatory clearance. It's a kind of a vaccine trial almost, if you will. And there are some concerns, of course, that those healthcare workers are seen to be guinea pigs in this, but authorities have assured them that everything's fine. We'll have to wait and see how that one plays out. But this will give the authorities access to at least 40,000 double doses initially and more to follow in the coming weeks. In phase 2, we're going to see the elderly and those with comorbidities getting the vaccine, hopefully still the Johnson & Johnson one. And in phase 3, it's for the rest of us, those who are healthier and younger and don't have comorbidities. We have been told, in fact, we interviewed Professor Shabir Mahdi today, and he reminded us, and specifically that the technology that was used in the AstraZeneca vaccine was the same as used in the Johnson & Johnson vaccine. So he's still optimistic that the AstraZeneca vaccine will show similar results to the Johnson & Johnson results. That was with the South African variant. So all is not lost with the AZ vaccine at the moment, Ramah.
Over 600 firms are still being investigated in contracts for PPE provision worth about $340 million. As the Auditor General put it, public resources are being spent in a weak control environment. Are we seeing any decisive action, though, from the President on corruption? Because this has been an ongoing issue in South Africa for the better part of a decade now.
You're quite right, Raman. The President, in fact, hasn't commented on the Auditor General's report yet, and that was released on Friday, as you know. And you also know that his ex-spokesperson was implicated, suspended, and more recently about to face a disciplinary hearing for not declaring a financial interest that she had in a related company owned by her husband. Her husband, in fact, had received one of the bigger and disputed PPE contracts in the Gauteng area. So this could be seen as decisive action, the suspension and the possible disciplinary action. But there are now growing fears of corruption around the logistics and the distribution of the vaccine in phase 2 and phase 3, which sees the vaccine go to the general population all around the country. And there'll be less control than there is currently, where the healthcare workers are getting it in very controlled environments. This SONA could have been an ideal opportunity for Ramaphosa to announce some decisive action, but we probably have to wait for the results of the investigation into that large number of transactions that are in dispute at the moment, Raman.
One last question for you, Angelo. Given how battered South Africa's public finances are, the state needs to cut spending, at least $20 billion over the medium term. What's the President's strategy, assuming he has one, for convincing the ANC that, look, this is a necessary sacrifice if you want to keep South Africa Inc. afloat?
Good question. We're not sure what the answer to that one is. Ramaphosa is probably pitching to his cabinet colleagues. We're not sure politically if he has enough strength to push through the changes that he does want to make. Of course, there are political issues here. If he does cut the public sector wage bill, he's going to have the unions crawling all over the next municipal elections, which are due sometime during the course of this year, COVID permitting, of course. So everybody's wanting to make sure that they shore up their support and that the ANC gets the votes that they need to go through to take over the municipalities that they want to take over. Of course, Cape Town's excluded there. But the big issue really is around the political issues they have within the tripartite alliance. We don't know if Ramaphosa has managed to convince his colleagues of a need to cut. We do know that the credit rating agencies want that cut to happen, and happen sooner rather than later. And we also don't know where Tito Mboweni sits in this whole equation either. So it's still up in the air, and we still haven't seen any action at all. Raman.
We'll leave it there for the time being. Angelo Coppola in Johannesburg. Thank you. We're still in South Africa, though. The credit ratings agency Moodys, and of course the agencies that Angelo is referring to there, has warned of a number of financial issues that are facing Africa's most industrialized economy, especially in the run-up to the finance minister's budget speech later this month. Here's Angelo Coppola with the outlook from Johannesburg.
South Africa's economy has been under pressure since the end of the global financial crisis, and this was made worse by the impact of COVID-19. Fiscal consolidation has been called for, along with reforms that will lift the country's economic growth rate.
One of the key variables in the arithmetic of debt dynamics is actually the underlying real GDP growth rate of the economy. When that's weak, you actually need to run a bigger primary budget surplus to offset the fact that our real interest rates on our government debt are in excess of the real GDP growth rate of the economy.
The debt trajectory is a huge cause for concern for analysts and economists.
We have a sort of a rising debt trajectory, we have rising debt service costs, which are always a very sort of key significant factor going forward. So if we continue at our current speed or momentum, we will definitely be looking at sort of further downgrades towards the end of the year.
Others say that the risk of a further ratings downgrade are elevated but are unlikely to happen in 2021.
We've had both Moody's and Fitch move late last year, implement a downgrade, but keeping the negative outlook intact, which implies that unless we have some kind of market change in our either growth momentum or our policy settings or our fiscal stance, that we're going to get further rating downgrades within a 12 to 18 months.
The country's finance minister, Tito Mboweni, is facing many challenges as he looks to fund government expenses.
Tito probably is looking at the province of Africa and facing our internal struggles far more than what the external pressures from the likes of rating agencies are. You know, we under a lot more. We owe a few international lenders significant values of money. You know, we're looking at the IMF, the African Development Bank. Those are the first port of call for Tito before sort of just pandering to what the different agencies would like to say.
The finance minister is stuck between a rock and a hard place, and if he doesn't find the right balance, we're going to have a problem in terms of the ratings agencies. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
From the south to the west, where Nigeria's GDP is forecast to rise amid plans by the government to rebase the economy. Now, this new plan would see the Statistics Bureau move to use price benchmarks from the 2018-2019 fiscal year for calculating gross domestic product. Africa's largest economy, as you might recall, slipped into its second recession in 4 years in 2020 as a result of a slowdown in economic activities, partly due to the pandemic, but also partly due to reduction in oil revenue. From Lagos, here's CGTN's Deji Badmus.
Even though Nigeria is currently in economic recession, the new plan to rebase the economy is projected to drive up the country's GDP. The Statistics Bureau says it will move to 2018-2019 in its adopted price benchmark for calculating the new GDP.
The rebasing that the government is planning to do with the Nigerian Bureau of Statistics will allow the country to recognize some sectors of the economy that has evolved over the past 4 or 6 years and that are now growing, so that we begin to measure them and as well as look for incentives to further encourage their growth.
The Nigerian economy is the biggest on the continent, but it has also shrunken in size from the 2014 rebased figure of $510 billion. As of 2019, the World Bank estimated the value of the economy at $448.12 billion. That figure may have gone down further with the devastating effect of the COVID-19 pandemic. Analysts say it's difficult to put a value on the expected figure after the planned rebasing.
Since after the 2014 rebasing of Nigeria economy, from 2015 till date, we never had growth rate that is equivalent to our population, which means we're not growing. Considering the realities of the economy today and considering the economic output we have had, other things being equal, if we do the right thing, I'm not expecting a growth in the economy. I'm not expecting an increase in the number that we have in terms of size of our economy.
I'm hoping that if there are sectors of the economy that we are currently omitted or have actually grown significantly over the past couple of years, that may help us achieve a higher GDP. But clearly, if we are going to be bringing this sector that we are not previously counted into the GDP computation, you should expect that the overall total GDP will be higher than what it is today.
The country's Statistics Bureau says it has commenced a national business sample survey in collaboration with the World Bank. Data collected from the survey will be used to determine the structure of the economy and its actual size. They'll also be used to identify the key sectors driving the economy, as well as the ones that will require some support from the government. Deji Badmus, CGTN, Lagos, Nigeria.
On to North Africa, where Tunisia's finance ministry says it's fully committed to taking unpopular steps as needed to save the country's economy before resuming talks with the IMF. Back in January, the IMF urged the North African state to cut spending on salaries and relief programs in order to help rein in the budget deficit, which it forecast could hit 9% of GDP this year without any reforms. With the details, here's CGTN's Adin Chouachi.
Tunisian authorities have said they will embark on a plan that aims to reduce the public sector wage bill, which now represents 40% of the state budget. In the meantime, the government is considering a maiden sovereignty sukuk issue, a turning to the international financial markets to help plug a budget deficit projected at between 4 and $5 billion in 2021.
The
COVID-19 pandemic has hit Tunisia like many other countries. We took a big hit during the second semester of 2020. This was due to a decrease in our fiscal income, a decrease in some other incomes. Unfortunately, we have not yet coped with this pandemic, and the effect of this COVID is still affecting our economy. We are trying to find some other sources of financing, but COVID has hit us.
Tunisia's Minister of Social Affairs declared that the state will implement the necessary reform plan to reduce the indebtedness of public institutions and enterprises, which amounts to around $3.2 billion.
Tunisia is going through a critical health, political, social and economic situation. We need to make urgent reforms while taking into consideration the social climate and also working in partnership with national organizations. The government and the labor union agree on the principle of reforming the public sector. We will thoroughly discuss this detailed economic plan to save state companies and revive the economy.
Tunisia's powerful General Labor Union has criticized the government's decision to divest state-owned enterprises to raise funds.
The purchasing power of the people is at the lowest level with poor salaries and high inflation. We invite the authorities to focus on improving the economic situation by looking for alternative solutions and sources of income. State-owned companies and their employees are not the problem.
According to the National Institute of Statistics, the number of job seekers rose from 14% last November to 18% in December 2020 due to the loss of thousands of jobs following the COVID-19 crisis. Analysts assert that the economic crisis has caused an unprecedented social unrest in the country. Abdel Shawishi, CGTN, Tunis.
Quick run to some company news. Let's start in Kenya. The country's Masai Mara Game Reserve is among top 3 parks worldwide picked by travelers during the pandemic. This is according to an American online travel company, TripAdvisor's Traveler's Choice Awards, rather. The compilation is pulled together from millions of reviews, ratings and experiences from travelers around the world. Masai Mara came third after Tanzania's Serengeti and India's Jim Corbett. Now, it was top-rated due to the 1.3 million wildebeest in migration, which happens every year with predators of various kinds in hot pursuit. Still in Kenya, the state-owned power producer KenGen has signed, as we mentioned, a $6.4 million contract to drill 3 geothermal wells in Djibouti. The deal was signed between KenGen and Djibouti's Office of Geothermal Energy Development. Now, this will essentially see the Kenyan energy firm export its expertise in the field. It's the third such deal it's managed to lock in the region. Kenya has geothermal potential of about 10 gigawatts, actually, but just under 1,000 megawatts of that has been brought online. Snacks and beverage giant Pepsi topped Wall Street's estimates for its fourth quarter earnings and revenue. The company reported fiscal fourth quarter net income of $1.85 billion. Net sales were up nearly 9% to $22.46 billion, topping expectations of $21.78 billion. In 2021, Pepsi is expecting organic revenue, which grew by 5.7% in the fiscal fourth quarter, to grow as economies reopen and COVID vaccinations continue to roll out. And finally, TikTok's deal to sell its US operations to Oracle and Walmart is reportedly on ice now that Donald J. Trump is no longer the president. Both the Wall Street Journal and Reuters are reporting that the deal could be shelved, although none of the companies involved has commented on record so far. The deal, as you might recall, was forged in September following executive orders from the then head of state. TikTok is reportedly waiting to see whether the Biden administration will uphold those same orders. That's a run through your company news. You're watching Global Business Africa. Time for a short break. Here's what's on the other side. Internet services in Uganda are back online after a month-long blackout. And the hospitality industry in Ghana is on its knees amidst COVID-19 restrictions.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN. See the difference. Welcome back to the program. Let's head over to West Africa once again. Ghana has renewed a ban on social events like weddings and large gatherings of any kind. This comes in the wake of a surge of COVID-19 cases in the country. As CGTN's Nabil Ahmed Rufai now reports, however, these pandemic restrictions are imposing a very heavy toll on businesses operating in the hospitality sector.
When Ghana went into a partial lockdown last year due to the outbreak of COVID-19, Veronica Mensah's business was hit hard. She says people who had contracted her to plan their events called to cancel and demanded their money back. Just when business started to pick up this year after restrictions were eased, a renewed ban on social events is once again threatening her business.
People are cancelling their bookings again and others are asking for a refund. The main problem is that we don't have the money to give them because we've used it to buy decoration materials. It would have been okay if they decided to postpone their events.
The government says the lack of enforcement of COVID-19 safety measures at parties has contributed to the surge in infections in Ghana. It has banned all social events involving large crowds to curb the spread of infections. This company that hires out chairs has had all its bookings cancelled.
People do wedding during February 14, and this February 14 fell on a weekend. So it would have been a very good day for us to have more programs, and the lockdown came. So it's been hectic. Being able to pay your rent and other things is not easy.
While the ban is already taking its toll, some managers of event centers like this one say they can do things differently when allowed to operate.
Our outdoor space is more than 1 acre, and it can quite harbor people of over 500, including the social distancing and then a 1 meter and all that. And I think we, the outdoor event centers, we take the COVID-19 protocols very, very serious. We make sure you wash your hands before you come in, you check your temperature, you sanitize and all that. And we have personnel for that. So I think the government should look at the numbers and then let us resume.
It's unclear just when the ban will be lifted. The government, however, says it will allow private funerals and parties for up to 25 people. With the uncertainty of when the ban on social events will be lifted, some event organizers say it's going to be difficult to pay back their loans. They say while the ban holds, many people within the industry could lose their jobs. Like Veronica Mensah, many people employed within the hospitality industry in Ghana want the government to reconsider its ban on social events. They hope it's lifted soon to prevent their businesses from folding. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
All right, then into the world of e-commerce now. Customers of Jumia here in Kenya may benefit from reduced delivery fees following the expansion of pickup points for goods ordered on the e-commerce platform. This new strategy, though, also aims to empower local businesses by boosting their revenue and providing better services to consumers as well. Now, entrepreneurs who do sign up to serve as local pickup points can earn up to $1,000 a month. The e-commerce giant strategies to expand its countrywide pickup station network over the course of the year, with over 100 more pickup stations expected to go live every single month. So let's dig into the details of this particular strategy with Apurva Kumar. He's the Senior Vice President of the Africa-focused e-commerce group, Jumia, and he joins us now live on the program. Thank you for your time this evening. So with regards to Kenya, walk us through why the focus here is on building up pickup stations for goods. Is this more efficient perhaps than setting up a last mile logistics network in target areas, or letting consumers essentially set that up for themselves?
Yeah, look, I think pickup stations are an extremely important part of the distribution strategy, okay? We today in Africa have over about 1,300 pickup stations, okay? We're trying to solve three problems really, okay? The problem number one is addresses, okay? Like when I joined Jumia a long time back, the first thing I did was I went on delivery runs with drivers all over Lagos, okay? I was living in Lagos for 4 years, okay? And then every single day I realized one thing, that the addresses are very unorganized. Like you're on the road, house number 18 and house number 19 are not even in the same roads, okay? So it's really difficult to find the address, the last mile address in some of these cities in Africa, okay? Second thing is really convenient and locating the person at that address, at the point. Like some of the colleagues who work with me in here in the office, they prefer to pick up their packages driving back from the Shell pickup stations, because during the day they are just all over the place. They're hustling, they're going around. So it's really difficult to locate the timing, get the timing right with the person, right?
So essentially, in this case, you're also responding to a change in consumer behavior, because in as much as we would say that, across Africa, you've got millions of smartphones all over the place. Everyone can drop a GPS pin pretty much anywhere, but that doesn't quite match up to how consumers actually do behave.
Exactly, it's a big function of your daily routine, and it has to really match up at that particular moment, okay? And if we want to really match it, it costs additional cost, which is the third point, right? Everyone wants to get their stuff delivered at low cost value. And when you combine all this with the infrastructure, with our mission to empower the local people to really get their own, small pickup station, etc., it makes a lot of sense to go in this route for us. It is making us help getting cheaper, to the customer. It is helping those solve problems of location, address, and convenience. So overall, the strategy makes sense. We're going to keep going bullish on this. We think it's working well. Our customers love it. It's empowering these pickup station owners. So it's a fantastic thing. It's a win-win thing for us.
E-commerce for a very long time, at least across Africa, tends to be dominated by these big urban areas. Lagos in Nigeria, Nairobi and Mombasa in Kenya. But looking at the cities that you're trying to expand into in Kenya, these are essentially smaller urban areas, settlements that perhaps would not be considered by other players. What's the market potential that you're seeing there?
Yeah, look, it's true, okay? Traditionally, the bigger cities have always dominated, but we've seen a shift happen in last years. I mean, for example, something we follow very closely is also looking at the Chinese market. I was reading last year in 2020 that the Taobao villages contributed $200 billion to Taobao top line. That sort of gives an idea of how the shift and the potential is in some of the other markets. For us, I think, look, it's extremely relevant. Some of these customers, they don't have access to the assortment. They don't have access to the products, and we are beginning to get there with that. So that is the number one relevance, I think, very, very important relevance, okay? And then the second thing is also, which is with the access and exposure to market, to internet, I mean, they also are getting to understand, what products, what things can be done. So I think it's really the need of access, basics, from simple things like groceries and rice packs to even to very, very high level of functional things, like for example, I recently know one of the guys, I was talking to a customer, he been in Nigeria, very, very remote location, and they wanted something very specific, an industrial tool, okay? And they ordered on Jumia, and we shipped it from China. And these kind of things cannot happen in those areas. You wouldn't find them. So that's the role, that's the value proposition. We see a big shift happening there. Already 25% of our business is beginning to come from those areas, and I think it's only going to get bigger and bigger.
The post office, this tends to come up in conversations around e-commerce logistics. The post office is an organization with enormous reach, lots of legacy infrastructure in practically every part of Kenya. When you were sitting down to craft this logistics chain plan, Did you explore partnering with the post office, or why was it not part of the expansion program we're seeing now?
Of course, look, we work with all the partners we can work. Our aim is to develop more and more partnership and create more and more reach. We are working with fuel stations like Vivo, like Shell. We are working with grocery supermarkets. We're working with postal offices. In most of the countries, we work very closely with the postal authorities. In Kenya, we work with Posta. In fact, we are live with Posta pickup stations in few places in Kenya. In Egypt, I'm very often talking to Egypt Post guys. EMS in Ghana, Amana in Morocco, Senegal. We are very closely working with the postal authorities in all countries. We really believe in that partnership. It's something we've been sort of building very slowly, but very strongly over the few years. And I think it sort of combines with the whole rural strategy, you know, the reach, the penetration, and the ability to work together. We see huge dividends on it, and we are making big progress with almost all the postal authorities in Africa now.
Is there also an element of trust as well? Because for a lot of the clients that you're reaching out to, they may not necessarily be familiar with Jumia, but the postal authorities, the post office is something they're familiar with. So if you say you're partnering with them, that sort of goes some way to bridging that trust deficit.
Of course, look, like I was telling you, right, it's really getting the location piece right, okay? So if we go for a pickup station, which is not so famous and customers still have to find it, look for it, okay? Everybody knows where the local post office is. If you go to like a village in Kenya, everybody knows it. So that big convenience, more than the trust, just the location, the convenience, it's extremely relevant. And of course, you know, working with postal, you understand the way it works, you're familiar with that adds huge value to your point as well.
Right. So this does seem to be relatively light on Capex, because every time I look at Jumia's results, there's an emphasis on trying to reduce freight and fulfillment costs. How much capital are we looking at investing in this? And is a payment due to your partner firms? How is that going to be set up? Is it a mix of how much space they're utilizing vis-a-vis how much goods they're delivering?
Yeah. No, look, I mean, you need to understand like who is the partner, okay? And the partner is a small shopkeeper in, let's say, Mount Kenya, okay? Already has a small shop with some recharge, with mom and pop stores, some food drinks. So they already have a little bit of infrastructure, sufficient enough. So we don't really expect them to add a lot of infrastructure to it, okay? So the model is very Capex light. It is almost like using your existing infrastructure to drive some more footfall in your in your shop, and then also using sort of Jumia as an advertisement, let's say, almost. So that's really the story of the thing. Now, in terms of the business model and the economics for us, it's very Capex light. It's almost zero Capex for us. We sort of operate using technologies and processes with these guys. We train them, so it's really tech intensive, but no Capex. And to your question on the pricing model, it varies a little bit, but it's really a function of the goods dispatch. It's fully variable. Everyone makes money when the goods are dispatched. There is no fixed cost element to it.
Right. One last question for you. So looking at your results again, you've reported that there were some interesting changes that you made in your pricing model that allowed you to save at least €1 million between, I believe it was April and the end of September, on freight and fulfillment costs. And also at the same time, your rate of cancellations, failed deliveries and returns, that has gone down from about a third all the way down to 14%. Walk us through what was done to arrive at those changes, to deliver those results.
Yeah. Look, so let's try to understand, okay? There are three players in the ecosystem. There is the customer, very important. There is the partner, the 3PL partner, the driver maybe, and there is Jumia's technology and the payment and the process system, okay? Fundamentally, what we did is we aligned our cost basis to the entire model, okay? So let me explain you, okay? Today, when as a customer, you shop on Jumia, okay, and you say, look, I'm going to order 2 items or 3 items, okay, let's say 2 items, okay, and they're going to come to you together, okay. So as a customer, it does not make sense to you. Why would you pay shipping fees for 2 items when you've ordered together and they're coming to you together, okay? Similarly, when we talk to a 3PL partner, we go and say, look, we're giving you 2 packages, but the reality is you have to drive the same distance and go to the same customer, okay? So we don't understand why does it cost more at a package level, okay? Typically, so far, and wherever I've seen in e-commerce in India, in China, the industry operates at a package level or at a kg level. Okay, what we decided to do is we aligned our customers' incentive, we aligned our partners' incentive, and we said we're going to operate on this move or the drive level. Okay, we're going to operate on one-stop level. So if you deliver to one stop, you get paid for the stop. So that's really the fundamentals of the thinking and what we did. We aligned our entire payment system around this thinking, and that basically streamlined the entire cost. It was quite clear to us how much we are spending. It was quite clear to customer what is the customer spending for, and eventually, you get this benefit and the balance, and it works like a win-win situation. So that's really the change in the strategy and the thinking so much, and then this model was put into place with talking to partners and making them on board on what are we doing, etc. So that's really the fundamental thing which drove this pricing model change.
All right, we'll leave it there for the time being. Apurva Kumar, Senior Vice President at Jumia Group. Looking forward to seeing the logistics numbers for Q4. Thank you for your time. Now, internet services did resume in Uganda following a near month-long total blackout. Well, near total blackout. The limited service affected businesses across many sectors. Now, it's not yet known how much revenue was actually lost, but SMEs hoping they will recover relatively quickly, as Leon Sanyange now reports.
Sandra Namara is happy to be back online. She often uses social media platforms to connect with customers for her flowers and gift business. But last month, the Uganda government blocked internet platforms like WhatsApp, Facebook and even Twitter. Namara says it put a huge dent in her earnings.
It was so sad. We couldn't reach our diaspora clients because they're online and we're not online. You find that clients want you to show them the photos of the things you have. You can't explain over phone.
Namara is not alone. E-commerce businesses, schools and even public services were impacted. The month-long shutdown was imposed during the country's general elections in January. Authorities say it was for national security reasons.
A lot was being planned using the different platforms. So having done what was done, saved us as a nation, made sure that at least there was peace and stability for the electoral process to be concluded peacefully. And I believe, having seen now that the electoral process is almost over, we can now go back to normalcy.
The shutdown was widely criticized. According to civil society organizations, action blocking access to the internet was intended to silence voters in the wake of a hotly contested election. More than 10 million Ugandans were affected by the internet blackout, and while some social media platforms have now been restored, others like Facebook remain non-operational. The monetary impact of the shutdown still needs to be calculated, but digital campaigners say many sectors were affected and it will take a while to recover.
The truth of the matter is we went back something to do with 3 years back because of multiple challenges that now are going to happen. People who would have connected to the internet between this period are going to take 7 more months or even a whole year before they connect to the internet. And that is really a problem from whatever perspective you want to look at it. Whether it is citizen engagement, whether it is business, whatever it is, we have made it difficult for Ugandans to tap into the existing tools that make lives easier for everyone else outside Uganda.
Many Ugandans, including Namara, were able to get around the blackout by using virtual private networks. But not everyone was so savvy. Now that connectivity is back, she's eager to get back to business full time. Leon Sanyange, CGTN, Kampala, Uganda.
Authorities in Morocco are facing mounting questions and calls for accountability days after 28 people died when heavy rain flooded a basement factory in the port city of Tangiers. An official statement on that incident referred to an illegal textiles operation, but police are here to question the owner, who is still in intensive care. The workshop's owner's sister took to YouTube to defend her brother, saying that the business was entirely legal. She alleged that the state was trying to dodge its responsibilities for the flooding. A representative of the country's Textile Industry Association also said the company was legally registered and licensed to operate. Morocco's informal sector does play a key role in the economy, with over half of the country's textile and leather production coming from mostly unregulated operations.
Most of these production companies only work for the benefit of the bosses and do not respect workers' rights. There's no declaration of the National Social Security Fund. There's no medical cover, no security measures. There is nothing. And I can give you an example in Tangier. More than 80 production units are not declared within the labor delegation. Nobody controls them here in Tangier, so they do what they want.
If the workshops are unauthorized, it's considered a crime. But it's also a crime if they are authorized because they don't respect the conditions necessary for industrial production and they're not in an industrial zone.
You're watching Global Business. Time for another break. Here's what's coming up. The European Commission has lowered the 2021 GDP growth forecast. We'll have the latest data. And the UK fishing industry has been hit by an EU ban on some fish exports.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Welcome back to the program. These are some of the stories making your headlines at this hour. The World Health Organization has recommended the use of the Oxford and AstraZeneca developed COVID-19 vaccine, even in countries that are tackling new variants of the coronavirus. The WHO's Strategic Advisory Group of Experts on Immunization have issued guidelines on the use of that particular vaccine. As I mentioned, it was developed by teams at the University of Oxford and AstraZeneca. However, the vaccine attracted a fair bit of controversy over its effectiveness against new variants of COVID. Somali leaders are set to meet next week after missing a deadline to conduct national elections by the 8th of February. Now, the talks are the latest efforts aimed at ending a deadlock on how the delayed polls will take place. President Mohamed Abdullahi Farmajo announced that the talks between regional and federal leaders will start on the 15th of February in Garowe, the regional capital of Puntland. But the regional leader wants the talks to actually be held in Mogadishu, where all stakeholders can take part. And finally, internet services resumed in Uganda following a near total blackout. The limited service did affect businesses in many sectors, and it's not yet known how much revenue was lost, but SMEs are hoping that the recovery will be rapid. Last month, the Ugandan government blocked internet platforms, including WhatsApp, Facebook and Twitter, ahead of general elections in the East African coffee producer. That's a run through your headlines. Now, European Union officials are forecasting an economic rebound within the bloc by the middle of the year, as long as there's progress being made in dealing with the COVID-19 pandemic. The European Commission cut its forecast for euro area growth this year by 40 basis points to 3.8%. Officials say the predictions do hinge on virus containment measures easing towards the end of Q2. They should largely be phased out, in fact, in these forecasts by the end of the year. The euro area started 2021 on a relatively weak footing as governments extended lockdown measures to combat the spread of new variants of COVID-19. Progress has also been hindered by a slow rollout of vaccines compared to the US and the UK.
Compared to our previous forecast in autumn, a smaller contraction in 2020, lower growth in 21, and stronger growth in 22. Because the recession in 2020 was not as deep as expected, and thanks to the breakthroughs regarding vaccines, we now project the EU economy will return to its pre-crisis GDP level in 2022.
European Commission President Ursula von der Leyen admits that mistakes were made in the lead-up to the bloc's decision to override parts of the Brexit withdrawal agreement in its quest to curb the shipment of COVID-19 vaccines to the United Kingdom. But this mea culpa, a public one at that, has done very little to appease lawmakers who blame her for the bloc's slow vaccine rollout. CGTN's Tony Waterman reports from Brussels.
Livid EU lawmakers finally got their chance to grill Commission Chief Ursula von der Leyen, who hadn't been seen in public for 2 weeks. Some questioned whether Brussels' vaccine strategy was a strategy at all.
This chaos, to call it a strategy, is a real ploy indeed.
Others vented frustration over the slow pace of immunization, especially when compared to the US and UK.
Only 3% of our population is vaccinated. How on earth do we want to champion COVAX if we can't even get our own population vaccinated?
Still, others criticized a lack of transparency, especially in deals with vaccine makers, who eagerly accepted billions of dollars in taxpayer money to develop the jabs, only to play coy on releasing the full details of the contracts.
All the information of real importance, such as price, the timetable of deliveries, and the details of the liability causes, have been blacked out.
In her opening remarks, von der Leyen admitted the bloc's immunization program wasn't exactly up to standard, saying vaccine authorization was too late and Brussels was overly optimistic on mass production. But she saved the biggest apology for the botched rollout of new curbs on vaccine exports, which initially sought to set up a hard border on the island of Ireland.
The bottom line is that mistakes were made in the process leading up to the decision. And I deeply regret that. But in the end, we got it right. And I can reassure you that my Commission will do its utmost to protect the peace of Northern Ireland.
But overall, von der Leyen defended Brussels' strategy, saying if the rich nations had been left to procure their own doses, the bloc's poorer member states would have been left empty-handed, jeopardizing the union's very existence. She also pledged more transparency going forward.
While Wednesday's therapy session allowed lawmakers to vent their frustrations, it's likely to have little to no impact on the actual pace of immunization across the bloc. Vaccine deliveries are only expected to pick up pace in the second quarter. Yet despite this reality, von der Leyen said Brussels' goal of immunizing 70% of the adult population by the end of summer is still possible, which left her biggest critics questioning if once again Brussels is setting expectations too high. Tony Waterman, CGTN, Brussels.
Live shellfish, or if you want to be a bit more precise, bivalve mollusks, which includes oysters, mussels, scallops from some parts of the UK's waters, have been effectively banned from being exported into the EU. Now, previously, the UK fishing industry exported shellfish that weren't quite ready yet to be eaten, and they were then worked on and processed, if you will, in the EU country that bought them. But now the EU says that fishing companies must purify these mollusks before exporting them in, as CGTN's John Bevere now explores.
The stormy waters cliché has never been more apt. In a harbour littered with cruise liners discarded by a pandemic, there may be little these fishing boats can do about the elements or the coronavirus, but the Brexit storm is entirely man-made. Dave Markham runs a company that catches, processes and sells crabs from southwest England. The demand is global. Asia is hugely important to them. But closer to home, the challenges of just getting the product across the English Channel are growing.
Frozen groupage has been really difficult, so it only opened up a week or so ago really for us to get anything out frozen. Prices have gone up, that's probably the biggest issue. There's no tariffs, but we do have huge costs for the paperwork this side, but also dealing with the paperwork the other side as well.
More red tape also means more delays. When it comes to seafood shipments, time is a luxury that few can afford. Since Brexit, one lorry load of fresh fish heading for Europe might need more than 50 bits of paperwork. One mistake, one oversight, or one problem at the border, and the entire shipment could be worthless. In the worst case scenarios, fresh fish has been left to rot. Selling more domestically is one way of avoiding the added problems of European trade. But despite a national dish of fish and chips, the UK is one of the smallest seafood consumers per capita in the developed world. For fishmongers like Dan Stern, they'd like to see more people eating locally caught produce.
We've all got used to cheap chicken and cheap salmon, so when it comes to protein, people aren't really willing to spend the money for wild fish that a fisherman has risked their lives to go out to sea to get. It's a difficult job, you don't always land, there's a lot of costs involved. So they have to appreciate it's not the same as just putting a cow in a field. You know, fish is a different product.
The UK government has launched a $30 million compensation scheme to help fishermen who've lost out during the Brexit transition period. It's also pledged to continue supporting a proud industry that's facing some of its biggest challenges. John Beaver, CGTN, Brixham.
The drone industry continues to expand pretty much across the world. There are now nearly 1 million unmanned aerial vehicles registered and operating in the United States. The flip side of that, though, is also something else that's been rising: the number of drone-related mid-air collisions, close calls and reports of aerial trespassing. New tech, though, might help to avoid some of those problems. CGTN's Hendrik Sebrandi reports from Colorado on what's hot tonight.
Vic Moss is a commercial photographer who has incorporated drones more and more into his work.
I fly my drone, depending on the week, I could fly it 4 or 5 times a week.
Moss is a member of the Federal Aviation Administration's Drone Advisory Committee, which is charged with helping the agency keep pace with innovation while protecting safety. Safety is a real concern in this fast-moving global industry. Last month, a Chilean Navy helicopter collided with a drone, injuring 1 passenger. Real accidents and close calls involving unmanned aerial vehicles are all too common these days. That's why the FAA is mandating new technology
that will broadcast things like the drone location, the drone height, how fast it's going, either the drone takeoff point or the pilot location.
Information transmitted by Wi-Fi or Bluetooth radio signal by each drone that's up in the air.
Remotely identifying drones is critical from a safety perspective, from a security perspective, and certainly from a traffic management perspective.
The remote ID rule was passed recently. At the same time, one Colorado entrepreneur has come up with another way to avoid drone collisions.
You would mount a lightweight iPad-sized radar on board of manned aircraft, identify drones in real time, and then display that information to the pilot in his cockpit.
Rick Zelenka says tests of a prototype of his system are just around the corner. Still, one aviation expert worries about the security risks posed by drones. He calls them poor man's guided missiles that, when outfitted with explosive devices, could cause real damage at places like airports if they're not neutralized.
The threat is there already, and the systems are not in place, nor does there seem to be a fire under anybody to hurry up and get these interdiction systems moving forward.
Moss, who helps educate drone operators who are just starting out in the field, says at a time when there are more than 100 estimated UAV airspace violations in the U.S. each month, like above wildfires, rules of the road like remote ID are necessary.
Obviously, there's going to be more drones in the air than there are right now. I think the main reason this is important is because it really is the first stepping stone for unmanned traffic management.
The day when autonomous drones roam the sky.
Anything that's going to help us identify what's up there and be able to navigate around it, I'm glad to see, because they're positive steps forward.
Moss says the digital license plate could add as little as $25 to the price of a drone and will be mandatory on these devices by mid-2023. Hendrik Sebrandi, CGTN, Denver.
Quick update on commodity prices for you. Brent crude is still holding under $62 a barrel. We're going to be looking forward to seeing some of the Baker Hughes rig count data that comes out of the United States later on in the week. Industrial metals, however, having an interesting time. Copper forwards in London just under $8,300 a tonne. They're up about 6.9% so far in the year. Here's what's coming up next. Kenya is rolling out the distribution of climate-smart seeds to boost production as weather patterns change adversely.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Welcome back to the program. Now let's focus on agriculture in East Africa. The threat of climate change is forcing farmers pretty much across the world to look for better seed varieties that can better cope with harsh and more erratic weather conditions. In Kenya, the state-owned Agriculture and Livestock Research Institute, it's better known as CALRO around here, has been developing seeds that can cope with adverse weather but also deliver much better crop yields. CGTN's Nick Mudimba has that story.
Climate change has affected the growing of crops in sub-Saharan Africa. This has in turn led to a drop in the amount of food produced in many parts of the region. Now, scientists at the Kenya Agricultural and Livestock Research Organization are offering farmers a way out of this problem. They're providing them with climate-smart seeds.
These climate-smart improved seed varieties, one, they are resilient to abiotic stresses, diseases and pests. That is one of the major limiting factors in productivity. Most of these old varieties are actually susceptible to diseases, and that results in low productivity to farmers.
It's against this background that Kenyan scientists are working to come up with seeds that are not only resistant to pests, diseases and drought, but which are also high-yielding. For instance, such seeds have helped farmers grow fast-developing sugarcane varieties.
All sugarcane varieties used to mature in 24 months. And of the 21 improved varieties that we've been able to develop, the climate-smart seed now are maturing between 10 to 12 months, which is 1 year.
With smart ideas of farming now in place, agriculture stakeholders in Africa are focusing on increasing the yield and resilience of crops. Biotechnology is helping eliminate some of the existing challenges. Smart seeds are assisting to produce crops that yield more with less rain, as well as those that are resistant to pests, diseases, and which also curb the threat of aflatoxin poisons in food. The evolution and adaptation of smart seeds in Africa will ensure a quick harvest turnaround, and the quantity and the quality will also be improved. This will indeed boost food production and bridge the gap in Africa. Nick Mudimba, CGTN, Kisumu County, Kenya.
Quick update for you as far as currencies are concerned. The Naira has been edging above that 400 Naira to the dollar level a little more frequently, especially in February so far. 4.329 was the highest that we've seen so far in trading today. So it'll be interesting to see how that closes at the end of the week. Keep a close eye on the South African Rand, 14.63 mostly today. But will there be a reaction in the currency markets to some of the policy ideas, or lack thereof, put out by the President in his State of the Nation address today? We'll find out and update you. That's it for this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen here in the last hour. There are many ways to get your thoughts back to us, all of them on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next.